Hey all, welcome back to Chip Stock Investor. Today we are here with a much anticipated AMD earnings update. So, Nick, was it as expected?
I think it was as expected, both pre and post Intel earnings, right? We always knew there were going to be some positives and some negatives here. And of course, the AI hype delivered. But we're going to talk a little bit about diversification today, right, Casey?
Yeah, that sounds like a fun word. You're going to have to explain that later, diversification. But I think we can preface this with talking about the AMD post mega merger with Xilinx. That finished up in 2022. It was $50 billion and it was paid for with new AMD stock. So I think, Nick, at the time, you were pretty optimistic about profit margin expansion. And the reason for that was that Xilinx was a leader in those FPGAs or field programmable gate array semiconductors that complement the software. And it had a far higher operating margin and free cash flow margin than AMD. So it seemed like a really good addition at the time.
Yeah. And we still think it is a good addition because that has played out. AMD's profit margins still overall, we think, on the rise during the bear market of the last year plus, especially in the PC market. We think Xilinx and the embedded unit in particular, those industrial and automotive chips, outperformed in 2023 and helped keep AMD afloat in what would have been a really, really nasty downturn. But now everything's pivoted to this AI infrastructure build out, which is where all the focus is on AMD. And we think that's the wrong way of looking at this. Okay, so diversification. 2 points here. First, AMD is a diversified business now, thanks to that Xilinx acquisition. And when you're now looking at a new secular growth trend in, let's not even call it AI infrastructure, let's just call it accelerated computing infrastructure in data centers. When you have a new secular growth trend like that, diversification actually becomes diversification. That's when you're so diversified that it dilutes your highest growth opportunities. Okay. And then second, AI, again, accelerated computing. That offensive was launched by NVIDIA last year, or at least that's when the world became aware of the offensive that NVIDIA had launched in this. It's really all about full stack computing, from chip design to software development. And AMD did get some nice software assets from Xilinx. That's the ROCm software stack that they talk about in tandem with their AI. So let's maybe start with that first and why this AI business is good, but maybe not quite as good as all the hype would suggest it is.
Yeah, I think we talked about this in recent videos. AMD and Intel aren't simply just going to catch up with NVIDIA. I know that's kind of what many investors maybe, or maybe many media outlets want to pit this as, but it's just not an apples to apples comparison. AMD is making some progress on software, as you mentioned, that ROCm software stack. And eventually, perhaps this could turn into some kind of Apple versus Android ecosystem. I don't know. We'll see. But we do think that we need to focus more on profitable returns for AMD, not exactly market share.
Exactly. So let's maybe look at the slide here that AMD provides for Q4 2023. Of course, data center, a nice 38% year over year increase. That's fantastic. We'll get to the other segments here shortly. It helped lead to 10% year over year growth in Q4. And where this is really important, we think, is this 38% year over year increase led by those Instinct accelerators, as well as the EPIC CPUs for use in data center servers, continuing to eat up market share. So we can compare this to the similar slide Intel provided last week, where their data center and AI group yet again fell year over year, down 10%. So what that means for AMD is they are picking up market share at Intel's expense and still have some ramp up here. This has been a divide and conquer story against Intel for some time and AMD continuing to execute. Let's talk briefly about outlook for 2024 on that data center business.
AMD CEO Lisa Su had said that the expectation was for $2 billion in AI and accelerator system sales for full year 2024. But on last night's earning call, she pushed that number up to 3.5 billion, a nice sizable increase in outlook. However, the company pulled in a full year revenue of $23 billion. So only 3.5 is still a very small portion of that expected for 2024. And the $400 billion AI and accelerated compute market opportunity that Sue and others in this space have penciled in for 2027 still makes AMD a very small player in this race.
Yeah, exactly. So, long story short, AMD's AI and data center business still very much a standout, but it is not going to just simply catch up to NVIDIA and put up the kind of numbers that NVIDIA has been doing in its data center business. So, let's focus on that bit then. We just inverted this conversation and started with AI. Let's back up to the fact that AMD is a diversified, or maybe you want to frame it diversified business, diluting its AI growth. But as a result of that, as a result of this reality, we need to focus on AMD's overall profitable returns. So let's talk about the real reason we care about AMD stock in 2024. As CFO, Jean Hu said on the earnings call, gaming and embedded are going to decline significantly in 2024, a significant double-digit percentage compared to 2023. No surprises. If y'all have been following our channel, you already knew that industrial and automotive markets, that's what coincides with AMD embedded, are set for a sizable decline through at least the first half of 2024 before bottoming out and returning to growth. So that's, I think we could say that's good news and bad news. Bad news, it's going to be in decline. Good news, AMD's commentary jives with everybody else's. It looks like midpoint 2024 is still going to be the bottom of this industrial and automotive chip downturn. But the bad news, it's going to offset progress in data center, AI in particular, and maybe more importantly, Kasey, the PC business. Let's talk about that. That's the real reason we think AMD is relevant for 2024, PC sales.
Yeah, absolutely. The other big offset, as you mentioned, is the massive return of the client or PC and laptop sales segment for AMD, up 62% year over year to 1.5 billion in Q4. Now, we know Intel made up some ground in 2023 after losing so much PC market share to AMD in the last decade. But in Q4, AMD really exploded a lot higher and making some headway against Intel.
Yeah, so I guess maybe this is where we can insert the AI buzzword again into the conversation, because AMD has often talked about being first to market with an integrated AI accelerator chip in its PC and laptop hardware. You're seeing some of the first devices come out on the market right now. So this is a new market, or maybe a new product segmentation of the PC industry emerging this year. Intel's got some new chips coming out. We've already talked very extensively about Qualcomm and the Snapdragon X Elite chips for laptops coming out this summer sometime. So this is another area where AMD could have another divide and conquer opportunity against Intel. You can see, comparing the two slides, Intel's CCG segment for PC and laptop, still far and away its biggest revenue generator. And it had a healthy rebound as well in Q4. But AMD, as you said, 62% absolutely rocked it this quarter. we could see a resumption of them eating up some market share starting in 2024 again.
The return of this segment really equals higher profit margins for AMD. And we really think this is the long-term AMD investment thesis, better profit margins. With this segment, the PC unit becoming profitable again and lapping the depressed 2023 financials, AMD earnings per share should rise by healthy double digits. We think possibly mid-teens to mid 20% rate on an adjusted basis in 2024 all the way through 2026.
Yeah, I think we've really tried to reframe this here on the channel and in articles that we've written, Kasey, that let's focus less on AI and all out revenue growth because AMD it's an old, mature business. It's been around for decades. I think sometimes we forget NVIDIA, a much younger business, wasn't even founded until the 1990s. So we've been talking a lot about this shift in focus. Let's talk less about growth and market share for AMD and focus more on just profitable growth. And we think management is listening. It seems like there's been a slight departure from their prior guidance and focus. Again, CFO Jean Hu on last night's earnings call, I think this is a significant quote at the end of her prepared remarks. We expect to expand gross margin in 2024 and continue to invest to address the large AI opportunities while driving operating model leverage to deliver earnings per share growth faster than top line revenue growth. This is fantastic news, Kasey. If anyone is an AMD shareholder, this is the kind of stuff you want to hear. Because of AI growth, could be an explosive growth year for those AI accelerators, the MI 300, but offset again by weakness in other parts of the data center, by embedded industrial and automotive chips. We may come out to like a low teens % growth rate for revenue this year. Pretty solid, but not exactly going to light the world on fire unless profit margins increase. And then suddenly, because of the revenue growth, you get even faster earnings per share growth. That's what we're talking about. That's the kind of stuff you want to see.
Okay, so with all that said, let's talk about AMD stock valuation at this point. By 2026, we're looking for gross profit margins in the mid to high 50% range by 2026 and free cash flow profit margins in the mid 20% to mid 30% range to justify the current valuation, which is
Meaningless on a trailing 12-month basis. Meaningless. Yeah. 65 times adjusted trailing 12-month earnings per share. And then price to free cash flow on a trailing 12-month basis, 230x free cash flow. Again, so big rebound probably coming in earnings per share and free cash flow this year because company lapping that bear market downturn that lasted through 3 out of 4 quarters, let's say, for especially the PC, the client group business.
okay. I think our key takeaway after the earnings is we're happy to hold the current position that we have in AMD, but we're not adding any more at this point.
Yeah. And again, just to reiterate, like you just said, Kasey, what we're looking for over the midterm, let's say, is we'd like to see a resumption in growth of profit margins. Now, that's going to coincide with a resumption of revenue growth. Absolutely. But we would like to see those gross profit margins rise to the high 50% range. And especially as AMD continues to pound the table on that ROCm software, there's no reason they shouldn't get to a higher 50% gross margin on their products sold. And then in tandem with that, free cash flow and operating margins in at least the mid to high 20% range. That's what we think will justify the stock price where it's at today.
Okay, that's a wrap on our take on AMD earnings Q4 2023 for AMD. We have much more coming your way as earnings season rolls on. We have Microchip, Amazon, Qualcomm earnings coming up. NVIDIA won't release its earnings for about another 4 weeks, so we have plenty of time to chew on this for the time being. Make sure you hit the subscribe button if you haven't already, and make sure you have notifications enabled. And if you would like to join us on Discord and get some fun emojis and badges, you can join our membership here on the channel. on YouTube or over on our Ko-fi membership page. It's just $5 a month to get all of our ramblings throughout the day on Discord.
And maybe one other addition, folks. Kasey puts all of our show notes. So for each episode here on YouTube, our notes go onto the Discord channel. So you can purchase some of those a la carte on the Ko-fi shop or get them as part of the membership if you so desire.
Yeah, absolutely. And we thank you all very much who have signed up for memberships, who have supported our Ko-fi shop, who have hit the super thanks button. We appreciate every one of you. And we thank you for just watching the show and subscribing to the channel. It helps us out a lot. Take care, everyone, and we'll see you later this week.